Hi, it's Devin Naika from Retirement Wellness SA. I specialize in helping government employees make one of their most important financial decisions, and that's whether you should retire or resign from the GEPF. Now, today I want to cover something particularly important, and that is around a tax mistake that I see government employees make. And this is a mistake that can happen either way, whether you retire or resign. What I want you to pay attention to in this particular video is notice that the tax planning is getting done in advance, meaning it's not done at the time of retirement or resignation. Notice I'm doing that now. Also want you to see that I'm not using any insurance company names. I'm not using any insurance company products, which is again an indication to you that financial planning must again happen in advance, and it's got to be done where it's adding value. It's got nothing to do with the insurance companies and their products, but more in terms of how do we take the information and apply it to your circumstances. So what I teach in the masterclass is this is not a situation where you don't have access to information or you don't have enough information to make the choice. We're living in a world now where it's so easy to access that information. You can download the SARS tax guide for free. You can download the GEPF member guide for free. You can get access to Google and research investments. You can research funds and tax. You can even get the income tax guide for free. So from an information perspective, that's not what you're lacking. But what you're lacking more, or what I've noticed members are lacking more, is how do we take that information? So once we gain access to the SARS tax guide, how do we take that information and bring it to your set of circumstances? So how do we take that information and apply it to you so that you're able to pay the least in tax? How do we take that information and apply it to you so that you're able to invest wisely and that you're able to grow your wealth? That's what we're looking for. So I'm going to show you how to do that now. And again, we're going to cover one of the mistakes that government employees make. And it's a pretty big one with regards to tax. And this costs members huge amounts of money. So let's first put this into perspective. We'll have a look at where you are on your journey. And let's assume that you are here now, we'll call it, and you're aiming at making your decision. We'll say it could be a year from now. I'll call it X. So at the time that you're wanting to make your decision. Notice we have a window period here. So there's a period from here to here. And inside of this period is the time that you have with which to make, to do all of your tax planning. Now I want to show you the tax guide from SARS, and then I'll guide you on the mistake itself, and again, how to navigate around it. Let's have a look. So here you'll see I'm working with the tax guide for 2022. When you are doing this exercise, make sure you're working with the latest tax guide. I'm paying attention to this aspect, which is the retirement fund lump sum benefits or severance table. Maybe you've seen this table before, or perhaps you've heard of people saying that the first 500,000 is tax-free, and you can see it here. From 1 Rand to 500,000, the tax is 0. And then the tax starts to increase the higher the lump sum. So if you're taking anything above 500,000, you can see from 500,000 to 700,000, it's 18%. If it's between 700,000 and 1,050,000, it jumps up to 27%. And beyond that, we're paying 36%. That's quite a considerable amount of money. Quick calculation on 1 million Rand, 36% means you're losing 360,000 Rand. So you can imagine what this would work out to if you're dealing with large sums of capital like 4 or 5 million plus. So the mistake again that individuals are making is not getting the tax planning done in advance. And by not having that done, we can't really avoid the tax that we are having to pay. Now, I want you to pay attention here. Even though this is the tax table giving us the guidance here, notice the bit of fine print that's taking place here. So notice all the fine print that's here. And that fine print is where the mistake lies. Again, it's not something that is very transparent. I don't want to say that SARS is, is tricking us, but it's not transparent for members because we just know the basics about the 500,000 tax free. So here's, in essence, what takes place. Perhaps you've got money, well, you definitely have money that's sitting with GEPF, that's here. And maybe you've also got money that's sitting inside a retirement annuity. Or you could have another retirement source, perhaps a preservation fund or something of that sort. What in essence is happening is SARS combines these amounts and treats them one and the same. Meaning, although right now you might be coming away from GEPF, SARS takes into account that you had already retired from a retirement annuity, and they factor that when you're exercising your GEPF money. We'll use it the other way around. So assume that you used up your GEPF money first, whether you retired or resigned, and then you want to make use of your retirement annuity. Now SARS takes into account what happened with your GEPF and applies the tax scale with you on your retirement annuity. What that means is, without you knowing, you could be paying more tax than what you should have been paying. Now you notice again from the example, nothing's transpired. All of what I'm showing you, I'm showing you now before you've actually made a decision. And this again leads to why financial planning, tax planning must be done in advance. So there are ways in which you could navigate around this to make sure that it's in your favor. I've also seen instances where, and perhaps this might have happened to you, maybe you've already retired from a retirement annuity. So you could have already exercised this retirement annuity option. You could have taken your 1/3 out and you've invested the balance. You could be getting an income from the balance as well. Now, in that case, when you are applying to GEPF, you need to factor that they will consider the 1/3 that you took from the retirement annuity, which means the tax planning here has to be particularly careful. Now, many, many years ago, when I was, learning all of these, I made a huge mistake with a client where I had overlooked this. It's also not something that is easily available for financial planners. And I remember this quite clearly because I was working with this member for probably around 8 months. And, the style in which I operate, I try to make sure everything is done meticulously. And I made this mistake when it came to the tax. And the result of that was when we went over to SARS, so the member and I physically went over to SARS to try and see what could be done because SARS had issued a tax directive. They refused to budge. And then I reached out to the insurance company and I tried to see whether we could make any adjustments there, but their hands were tied. So this was back and forth until eventually we went back into SARS. We sat with the consultant, tried to get to the bottom of it. And then we heard from this consultant in no uncertain terms that SARS would not go back on a tax directive. They would not go back on a tax directive, meaning once they've applied the tax directive, once they've determined the tax that is payable here, they're not going to reverse that decision. Now, this was a very, very painful mistake for me. Fortunately, I was able to come through with a solution, but this was quite costly because at the time, there was no solution offered by SARS. There was no solution offered by the insurance company. And the only way forward for me was to forego all of my earnings. So I had lost all of my earnings and I created a solution for this client that put the client in a better position than before the mistake. But again, it came at a cost because I lost a huge amount of income. So imagine working 8 months and not being able to earn an income for the entire period. But all of this leads to a lesson. And the key for me is the lesson that came as a result of it. And that lesson is just by finding out that SARS has this particular technique, they're not able to go back on a tax directive. I was able to go and analyze, what do I need to do in order to make this work better for me? So remember I said earlier, it's not about beating SARS. So you're not going to beat the system, but you want to understand the system. So then I started to study this a bit closer, went back in on the Income Tax Act, tried to get more information from SARS, and then I got it. And the solution is trying to, again, have the planning done in advance, but now it put me in a position where I'm able to analyze this information, analyze that information. And before a member makes a move, so before a member actually withdraws that money, I'm now able to give you guidance on what the tax implication would be. And just by being able to do that, it means we could adjust the values here a little lower so that your tax rate is lower. So if you pay careful attention, that means we're able to adjust this inside of your window period here to make the correct decision so that we're not having to pay tax here. Okay. Now notice what I've done again in the video. I've done all of this planning in advance before the situation happened. So if you want to avoid this mistake, if you want to avoid a mistake that costs members millions of rands, you want to start getting your tax planning done well, and you want to make sure, again, you have someone who is familiar with this. If you need more information, or if you just need guidance on how to navigate around your retirement or resignation, you're welcome to reach out to me via email, or you're welcome to join one of my masterclass sessions. I'd also love to know how helpful you found this video, so give me a thumbs up if it was helpful, and post some of your comments below. Remember to share, because there are a lot of members who are waiting to get access to this kind of information. And if you found the YouTube channel, please click subscribe.